Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi everyone, how you going? Welcome to the podcast. It's a wet and windy Sydney day here today. We're smack bang in the middle of winter now. I think it's a time when a lot of people sort of retreat indoors, and I know a lot of property investors during this period of time actually put their head down and start thinking a little bit more about what they're doing. And you could flip that on the other side of we always say during the summer months and that break sort of during January, a lot of people sort of reflect and recharge. It's happening right now as well. And I think particularly the environment we're in, a lot more stability. And we've spoken about that at length at Smart Property Investment Show. Don't really want to go over it, but just a quick summarise. Certainty around the government, certainty around policy, certainty around who and what decision is going to be made in Canberra. We now know that there has been a rate cut. Money is as cheap as it's ever been. Things are a little bit better than what they were sort of 6 months ago when there was a fair amount of uncertainty with the government. We also now know that APRA is recommending to the banks to reduce or remove some of the tightening around lending. So it's a good time to be a property investor, but it depends who you talk to, who might say that. Other people might say it's the worst time to be a property investor. My view, I think it's a great time. Robert Skeen, our guest in the studio today, he's a buyer's agent. Good time or a bad time to be a property investor, Robert?
G'day, Phil. Good time.
Good time.
My thoughts is it's always a good time to buy property, and it doesn't matter whether the market's bullish or whether it's a bear market. There is a bargain to be had if you're out there 6 days a week looking for it, for whatever reason. Whether it's the three dreaded Ds, debt, death, and divorce. If they need the money urgently, if it's an agent who might be out of area, who doesn't really understand the values of the property and he's underpriced it, there's always a bargain to be had if you're out there actively looking.
So what you're saying then, you need a buyer's agent, right? Because only they're the people out there 6 days a week. I thought it'd be 7 days a week. Well, you have a day of rest to you. What's going on?
Yes. Well, look, I don't want to be biased. Yes, a buyer's agent's great, but I can tell you there's some great investors out there that are out there actively looking 6 days a week or 7 days a week to find that diamond in the rough. Yeah.
Oh, look, if you've been listening to this podcast for a while, you would know that every property I buy is through a buyer's agent. I've shared the reason why I do that many, many times. And so I hope you don't think there's some bias here. That's my particular choice. I get a lot of value out of using buyer's agents. And, it is a growing profession. There's a lot more buyer's agent in the market right now. And I think more Australians are actually realising the benefits of using buyer's agent. But you don't need to use a buyer's agent. You can do it yourself if you have the skills and capabilities to do so. Maybe we can have a bit of a chat about that today. What can you learn? What are the secrets of a buyer's agent that you can apply yourself? Let's have a chat about that, Robert. You're going to have to give away all of your secrets right now. I'm going to call you out. All right, but the first secret, I guess, is you need to be in the market all the time. You need to have experience.
I think so, definitely, yeah. You need to, if you're going to invest in that particular suburb, educate as much as you can on the values of the area by attending all the auctions and seeing what's selling. And, once you're au fait with the prices, setting about a negotiation strategy to secure the property under market value. So, let's look at the motivation. Questioning the agent, where the owner's going, why do they need the money, how long's it been on the market, why are you asking this price? Get them to justify it, because the market's come down. They might be still have expectations off of last year where the market's a bit high, or even the owner's got higher expectations. So question. And once you've done that, work out a strategy of where you're going to start in terms of your first offer, where your second offer is going to be, and where your third and fourth and maybe final offer is going to be. And what I'd say with that is first offer extremely low, second offer a little bit more substantial, and from your second offer and third offer, really look for a counter offer on what the owners will accept, right? What's the bottom line that's going to buy the property? And then from there, you've done all your due diligence in the background. Your third and final offer, once you've got the counter offer, once again, you go in lower, but with the signed contract and the 10% deposit.
So it's all about tactics and strategy. Now, Robert, last time we caught up, and I really reflected on how quickly I'm aging, was August the 1st, 2016. So if you go and check it out, smartpropertyinvestment.com, you just Google Robert Skeen, S-K-E-E-N, and you can go and listen to what we spoke about then. And that's nearly 3 years ago.
I know. Don't tell me. I'm
feeling
horribly. Really odd. I have. Look at how grey my hair is. This is what real estate does to you.
But when we got together, we spoke about how you can best negotiate with agents, and we also spoke about how do you determine the fair value of property? Now, that just made me think what you were just chatting about there around the process of bidding for property, whether it's at auction or whether it's sort of a private treaty. That's by and large, it hasn't changed, right? How to determine the fair value of property?
Well, it hasn't changed too much, but the tactics have changed a bit. I think when we spoke back then, with things going to auction, you really wanted to move quickly. So if you saw the property the first open, you want to do your due diligence and try and wrap it up that first week. Reason being, you want to cut out a lot of the competition that the property picks up over the 3 or 4 week campaign of the auction. And certainly in the bullish market, when you're going to auction, if people have psychologically made a decision to buy it on the day, they get a bit emotional about it and usually a bit over market value. So the tactics change in regards to this market where things are slowing down, and it might be a process of laying in some low offers leading up to auction day, getting the property passed in and negotiating it once it's failed post-auction. So, once it's failed, the owner's, oh my goodness, I spent all this money on advertising, you're in a better position to buy the property. So it's changed a bit, and I would say, taking your time with it now as opposed to going in bullish right from the beginning. And that's only if the property, look, if it's a bargain in the first week and they're quoting it and it's an absolute steal, you might want to buy it that first week. But if it's not, let it go through the campaign, negotiate post-auction.
So many ways you can play this. You need a strategy set up for it. But this whole determination of fair value for property, my view, and I want to pick your views on this as well, Robert, is that a lot of people, and this is about what buyers agents do well that your property investors, if they want to do it themselves, can do, right? A lot of property investors are scared to lowball an offer because they think it's offensive. You guys, as in buyers agents, that's your craft, right? Why do people, do you think, get so concerned about offending someone with a lowball offer? And let's chat about that as a tactic. Is it a good thing to do or a bad thing to do?
Oh, look, I think it's a good thing to do for us because, we can take the emotion out of it. Look, don't shoot the messenger. Phil wanted to start a lot lower. I'm just passing the information on. So, we can act as that buffer. I think Australians traditionally are a little bit scared to negotiate, right? It's not really in their culture like it is with a lot of the Europeans. They like to bargain and haggle all the time. So I think that comes into it. It is changing. We're starting to see, Australians haggle a lot more, which is great. I think negotiate everything. Yeah. But yeah, I think people do get a bit scared to.
Do real estate agents expect to negotiate, or do they obviously just want the nicest, easiest, simplest way to flog a house, right? For the highest possible price. So
yes.
If you lowball or if you go in too hard, or they just get a smell that you're going to be hard to do business with. They don't. It gets harder to buy property on that basis. They want the easiest path to a sale. So how do you balance those things out? So you're good to do business with, but you're hard to do business with in that you're going to be driving down a price.
Yeah, well, look, I guess, if you're the only buyer that's there, they're going to have to deal with you, right? As you said, they do want the sale. So, you might start off a bit tough in terms of the low offer. But like anything, I think when it comes to negotiating, you need to be respectful and courteous. There's a way that you can say things, the way you can put it in, as opposed to, being aggressive and saying, here's the offer, we've seen something else. If you don't like it, go stick it. You want to be respectful about it. So you just open the channel of negotiations. And I think most good agents realise that it's a starting point.
So, and it's really important this the style or culture of negotiation. And when I buy stuff, I have a particular style of buying, and I imagine you do as well. How would you describe the way you negotiate in terms of the flavour of or how you present yourself or the transaction process?
I like to be quite transparent about it all, and as I said, be respectful. If the property's well priced, I like to move swiftly.
Yeah.
So, put in the offer, do my due diligence in terms of building and PES, the contract being perused, and literally within 24 to 48 hours, have it wrapped up, either way.
So speed is good.
Speed is good, Speed is king. I think the agents themselves, and even the owners, if they get a fair offer early in their campaign and it's in writing, the old, bird in the hand's worth two in the bush.
Yeah.
They'll take it. The owners are, as you probably well know, if you've sold property, they're a bit worried at the moment about auctions and how is it going to be in 4 weeks' time. We've got to keep the house clean. There's a lot of stress and emotion. So I think if they get a good unconditional offer early and it enables them to do what they want to do, they'll take it.
So speed and certainty, I agree with you. Also, if you look at the economics of how a real estate agent gets paid. So they get paid a commission from the vendor, so the owner of the property. So if they can spend the minimum amount of property to realise what is the same result if they sell it in 1 week or 8 weeks, everyone benefits from that. The vendor has to pay less on marketing. The agent has to spend less time transacting it. The buyer gets certainty. They actually understand what's going on. So I completely agree with you. Speed is of the essence, and it's one of the tools that you can use in your arsenal to help cultivate a sale. Knowing and seeing a lot of people negotiate for property, and people who don't negotiate for a living. I negotiate for a living. It's probably different to the negotiation that you do, but every minute of every day I'm negotiating something, right? Yeah. A lot of people who don't have negotiation as part of their DNA think negotiation is just being hard and heavy, being very deliberate and forceful and aggressive in how they do it, and they keep the negotiation always based on price. Price is just one very small component of a negotiation. And what I find in terms of any negotiation, whether it's buying property or buying a stapler from Officeworks, right? If you can put theatre into any negotiation, if you can make the person you're buying the property from or whatever from like you and enjoy spending time with you, that's a great vehicle for manoeuvring a price in the way that you want it. But let's have a chat about other ways you can negotiate for property. So price is one thing. What else is there? You've got a whole bunch of tools.
Yeah, terms. Terms are important. So if you can, once again, coming back to knowledge is power, if they need a longer settlement, that might enable you to get the property cheaper. And I had a property that was over in Bronte a number of years ago. There was an offer that was $85,000 more than ours. And they ended up going with our offer because we were able to offer them a longer settlement due to she had a little family daycare centre there and they hadn't relocated that anywhere. And so that longer settlement enabled them to do that, and they took our offer, which was $85K less. So terms are very important.
Robert, I'm just going to want to take a quick break. When we come back, I just want to have a chat to you about what you think is happening with Sydney and Melbourne property markets. We'll be back in a second. So, Robert, we're just having a chat about these ways around negotiation and how you can amplify your ability to secure a property on your terms. I want to get into property prices in a second. We spoke about price. We spoke about times and terms. Can you tell me a little bit about early access? That's something where I know buyers agents do this really well.
Yeah, so, we've got a database of agents in all the sort of areas that we're buying in, and we will call them and email them weekly what our clients are looking for, and they'll let us know if any pocket listings or off-market listings that they
Pocket listings.
Oh, yeah. So that's listings that they're not advertising online or in print, and they're usually people who, certainly in the higher price properties, they might be in the public eye and they don't want strangers coming through their open homes. It might be properties that they've actually listed but they've yet to take the photography and do floor plans and write the copy and things like that. So they'll actually let us know about those properties before they hit the market. But for the average person or average investor that's out there, if you're looking to buy in a particular suburb, get to know the top 2 or 3 agents. There's always 2 or 3 that have all the listings. Get to know them, get them to invest their time into you. You might have a coffee with them, look at 4 or 5 or numerous properties with them, and they equate that time that they put into you as an investment, right? Investment of their time. So when the time comes that they've found you a property, they're more likely to really work with you, work hard to get you the property at a good price because of the amount of time they've spent with you and you've built that rapport.
And when you look at sort of negotiating a contract, I know a lot of property investors, to the point around early access, you can actually get in and do a renovation before the property settles. What's your thoughts as that as a strategy?
Look, it's a great strategy, I think, for an investor, but I haven't come across too much of that because, usually the vendor's lawyer on the other side is worried about insurance claims and things like that. Yeah. But I think if you can do it, absolutely. Fabulous.
That's good. You're buying at the moment. What sort of market are you in?
We're in the Sydney market, and we usually buy 20K radius of the CBD. Okay. So areas that we like at the moment are Maroubra, Randwick and Kensington with university and the light rail and everything happening around there. In the inner west, we really like Gladesville and Drummoyne. I know Gladesville, there's a lot of new development there, but we like the smaller, older 60s and 1970s type buildings. We find that they're quite well priced at the moment and they're renting well, and it's well within that 12-kilometre radius into the CBD. Move around to the lower North Shore, we really like Camaray and Crow's Nest and Cremorne. We found the market there in terms of apartments have come off almost 20 to 25%. So you can buy a really nice. There's one actually in the moment in Cremorne, 2 bedrooms, small block of 12, huge balcony, car space, Harbour Views, this property probably in 2017 would have sold for about 1.2. It's on the market at the moment. You can buy it for $975. So, yeah, great buying in those areas.
How long do you reckon that'll last, these good buying conditions in those areas? Because actually, where we're recording right now, we could probably see that property now.
Yeah, that's right.
Is that going to last for a little while, or is it just going to switch and turn pretty quick?
I don't know. Yeah, it's a funny little market. The last couple of weeks, there's certainly a lot more confidence. I think that's, if we look at the auctions that we've been attending, properties have been selling at reserve, in some cases a lot more over the reserve. And I think it's probably all those things that you mentioned earlier, but also, there's a lack of stock. So people are going into the things that are available and they're competing for them at the moment. Once spring comes around, I think there'll be a little bit more choice, and so prices will probably just even out a bit. But at the moment, it's not a bad market for a seller.
So why do you concentrate on these particular markets? You're talking, let's call it sort of inverted commas, blue chip. You're talking, north of $1 million for this sort of stuff. What is it about the city market and those type of properties that you are attracted to?
Well, the old saying, right? There's no more land in the area. It's close to all the entertainment, business, transport. So we find that these areas long term, if it's what the client's looking for, capital growth, these are the areas to buy in. They're obviously, it depends on the client. So if they're looking for a bit more cash flow, then we'll look at positively geared type scenarios, or if they just want to be neutral, we're happy to advise them of those sorts of things. But for those particular investors, we're looking in those markets. Coming back to a positively geared one, we've just bought one recently. You might like this one, Phil. In Sydney, 7% net return. And now it is further out, so we're talking about a suburb called Gregory Hills. I'm not sure if you've heard about it, but there's a lot going on out there. You've got to take a drive out and have a look.
I'd like to think I know most suburbs in Sydney. Where's Gregory Hills?
So it's out near Camden, about 20 minutes out from Camden. Okay. But I mean, it's built up. There's hotels out there.
Which side of Camden is it? Like towards Liverpool Way or up towards Penrith Way?
Up towards Penrith Way.
Okay.
Yeah, so they've got the new airport going out there.
Okay, so Badgerys Creek Way.
Correct.
Yeah.
So if you go out there now, it's amazing what they've built. Huge streets, huge shopping centres, buildings. They've got a new hospital going out there. So anyway, coming back to the story, we've bought a house there that the developer has turned into share accommodation. So 4 bedrooms with a bathroom and a little outdoor terrace. It's Torrens title, and it's renting the 4 bedrooms for $200 a week. For the room, so share accommodation or buy room. Now, I know what you think. It's not those, dodgy landlords that pack in 7 students into 1 bedroom. They're usually people that young professionals that want to leave home, might be blue collar workmates. They're the type of people that are renting these properties.
So
it's Torrens title.
So they're not like crack dens. I'm thinking about some of the ones I've been with. You go, just digress, but connected. I used to be. I delivered pizzas for 4 years when I was at university. So I've delivered a lot of pizzas to places like that.
Right, okay.
And my memory of those share accommodation places are. They're not particularly nice joints. They're all right, nice people. They pay their bills most of the time, but they always invite me in for a bong, which I never had. The world's changed though. But a lot of investors are sort of really looking at these type of shared accommodation. It's become a lot more, and people are purpose building properties for this thing now. Aren't they?
They are. Yeah, like this particular developer. Yeah, no, we think it's a great strategy, and he's got 5 properties, and they're scattered throughout the suburbs, so they're not just condensed into one little area. They're in nice residential streets.
Yeah, interesting. So, what do you think about Badgerys Creek in that area? Are you hunting out that way? You said you're sort of targeting this 15k radius from Sydney, but you like that area
for positively geared property. So,
stuff.
If clients want to buy in Sydney, they can drive out there, see, feel, and touch. So, for local buyers, it's not a bad option.
How long does it take to get out the Gregory Hills?
A while.
Straight down the M4, turn left on.
Yeah, look,
I'd say. What's that road at Penrith?
Yeah.
I can't remember what it is. Yeah.
About an hour and a half, I'd say. Yeah.
That's not too bad.
They've got a Lexus dealership there.
Oh, do they?
Smack bang in the middle of Gregory Hills.
Okay.
Yeah, so, there's things happening out there. It's quite surprising.
Well, this is Sydney for you at the moment. So you don't touch any other state-based markets?
We've got an office up in Brisbane, so we do buy up there, but I don't talk too much about that because I don't really know that market too much. Okay. But once again, I know Andy, our guy up there, he buys in Paddington, Balmoral. They're all sort of established suburbs within 5 minutes of the CBD.
So a similar strategy to what you have in Sydney. It's just
Correct.
A smaller radius. Okay. So you like the blue chip stuff mainly,
Yep.
rather than lower price stuff. And is that
Nothing
just-
against it.
No,
Nothing
no.
against
Well,
it.
but it just goes to show that there's different strategies for every different person. And one of the things we like to do on the Smart Pro Investment Show is sort of look at all those different strategies. And it's not my position to say one is right or one is wrong, but I think as a property investor, you need to make sure you match the one that's right for you. I want to chat about that, about the sort of the makeup of a property investor. Just before we do that, I just want to go to another break. So, Rob, we're talking about strategies and how property investors need to actually understand and interpret what the right strategy is for them and what they want to do. Now, the stuff that you do working with your clients, is everyone out just to, is everyone come to you and go, Robert, I want to be a property millionaire, tell me what I need to do? Is that pretty much how most people approach this? Or is it, how do you get down to the strategy? How do you get down to the nuts and bolts to work out what the strategy should be?
Well, I think just working out what's important to them, so do they need cash flow out of it? I think ultimately, yes, fundamentally people are buying because they do want to make money. They're planning for their retirement, they're planning for perhaps, putting kids in private schools and things like that. But it just depends on their strategy. So if they're looking for cash flow, we'll advise them of that. They're looking for capital growth, absolutely. And we find most of our clients at the end of the day want the capital growth.
Mm. And the clients that you are working with right now, what you've seen over the many years you've been doing this, what is it that sets great property investors apart from average property investors?
Courage,
Okay.
Buying when nobody else is buying. So, through this downturn, we've had a lot of clients buying real estate when everybody else isn't doing anything. So I think it's going against the grain and having the courage to step out, make the decision. That's what I think it's been.
What do you think it is that gives courage to these people who are being courageous? Is it confidence? Is it information? Is it an understanding, greater understanding of the market than other people? What is it?
I think confidence. Yeah. And sometimes, it's obviously with us as well, having confidence in our ability. With a lot of our clients, we've been buying for them for 20 years, so they've seen the growth that they've had over the years, so it's quite easy for them to go, look, I want to buy another one. Yeah, so I'd say that's probably the main thing.
What's the worst you see in property investors? Other than not able to make a
just
decision.
getting really emotional and paying too much for a property. There's one that we're looking at buying, and this is an investor, but there's a house that I looked at recently in Mossman. The owner paid $12 million for it in 2009, right? Huge money back then, and he had intentions of, I think, buying 3 blocks along that street. I valued it this year, or my opinion on the property's worth 10.5, maybe 11 million tops. The agent's got an offer at 13.5 million. This person, he's obviously not a local buyer.
Yeah.
But that's what I see. People make mistakes all the time. They just come in and just pay, and investors pay way over the top.
That's $3 million over, right?
Yeah.
It's a big number as a percentage. You need to be in the market a long time to try and get that back.
I think so, definitely.
But if I was the seller, I'd snap that off up straight away, right?
Yeah.
How many people are you running across are buying 3-4 blocks in a row in Mossman?
Not many. Not many.
So much money washing around at the moment in Sydney, like. That sort of, you got to call it the top end of town. Is there people out there splashing out big dollars on property?
Absolutely. I think, Sydney's a bit of an international city, and if you're working in that sort of top 5%, they're not really worried too much about the market. Yeah.
They can stick, and this comes down to cash flow, right? Can you hold on to a property if are they taking like the clients that you're working with, and obviously you're not going to name anyone, but are they cash buyers, or are they sort of looking for? They normally got a lot of debt as well. What do you normally see?
Some are cash, but to most people, have a mortgage.
A mortgage, yeah, a big cagey there. Oh, nice. So are you enjoying life as a buyer's agent today as much as what you were sort of 5 years ago?
Loving it. Yeah. I don't think I could do anything else. They always say do what you love, and you never work a day in your life, and I really do feel that with what I'm doing at the moment.
What is it though? What do you get the kick out of?
I love buying property and seeing people make money. I love buying property for families and seeing the kids run around the backyard, and it's just something that I love to touch, and I'm sure my buyers as well, and seeing their wealth grow over the years. That's really a lot of fulfillment for me.
Yeah. Are you in the market yourself? You're buying?
All the time.
Buying?
Yeah, always looking.
What are you up to?
Well, at the moment, I'm just looking around. There's a few good little cottages around the inner west, so I quite like Dulwich Hill.
Yeah.
Yeah.
I've been thinking about that area, sort of that. I guess that train line that goes, the Western train line that goes out to, I guess, terminates in Penrith, right? You know, Stanmore, Petersham, up that way, and then down through Dulwich Hill. And
good value.
I've always liked that. Yeah, it's good value at the moment. So it goes back to where we started. How do you determine the fair value of property? Why do you think those properties are fair value at the moment?
Just seeing of what they were selling for a couple of years ago and what they're selling for now. You know, you can get a nice sort of semi-style property, a bit of land there, off-street parking, convenience of all the lovely little eateries and parks and schools for around 900,000. You know, come over this side and we're looking at apartments. Why not get Torrens title, land, and something you can perhaps add a bit of value to?
Yeah, interesting. Well, thanks for coming in, mate. Let's not leave it 3 years.
Yeah, let's not. Yeah, you know, good to see you.
You come and give us some secrets of Sydney's A-listers, where the rich are buying is Sydney. I think we can go down that way, but I doubt you're going to give me anything away there. So you hold your cards pretty close. Yeah, where do I get that? And, you know, thanks for sharing the way you see the world and how property investors and, you know, as I mentioned, I use a buyer's agent, but I use a different buyer's agent, don't use you. Yeah. But thanks for sharing those secrets to the trade. It's knowing them is one thing, executing them is another. So you know, if you enjoy that sort of stuff, we've written about it at length on smartpropertyinvestment.com. There you go and check it out. Robert, mate, thanks for coming in. I do appreciate it, and we'll get you in again soon. And remember to check out smartpropertyinvestment.com/subscribe. That's where you can make sure you're getting all the information you need, the first to know around property right across Australia. Go and check it out, or social media if that's how you like to get your info. Smart Property HQ is what you need to search. If you like what we do on the podcast, remember to press the subscribe button. If you'd like to come on, we have people from all walks of life coming into the podcast. Property investors from just starting their journey through to people who are on the other side of their journey and enjoying wealth through property. You can get in touch with the team, editor at smartpropertyinvestment.com.au, and we will tee that up. Thanks for tuning in today. We do appreciate it. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.